Is it too late to get into the housing market? And can homes double from here? And the answer is no. It's not too late to get into the real estate market. Go buy a house, go buy one right away. And can they double? Yes, they can double. Now, I just did a video yesterday. We mentioned on this, and I haven't gone into any great depth. And did I get the comments? People emailing me at michael@michaeldeville.com. Had an awful lot of people asking about it. So let's get to it. Yes, I think we're in an inflationary period. I think it's time for you to start protecting yourselves. I don't think it's transitionary where it's just a couple, 2, 3, 4 months or a couple of quarters. I think this is going to be with us for a while. I think we have a legitimate inflationary cycle happening. Now, we can have a Mad Max event. We can have the government start doing some crazy things. But unless this cycle stops, prices are going to go much, much higher. And in order for you to protect yourself, you need to get out and buy a property, get it financed, take some encumbrances, go encumber the property, go borrow some money. You can get money dirt cheap. You're going to be paying those dollars back in much, much cheaper dollars. And inflation is coming. If you follow my work, we said we saw it in a pipeline. It's certainly here. And I'm here to help you any way we can. Now, if you like my videos, give me a like up. I love that. Give me a thumbs up. Now, let me see if I can't go and get the screen share, because I do want to talk to you about some of my findings. Now, we've been talking about my timing model. I keep giving myself a little bit of a CYA and say it doesn't necessarily mean that it's going to work this time. Doesn't necessarily mean that this is going to happen. Let me tell you that the timing model absolutely aced both of these corrections. It knew exactly when that was going to happen. We were prepared for it. We were forecasting it. We talked to our clients about that. It's absolutely on time. So I think we are here. I think we're right in the middle of the accumulation phase. And this is the explosive phase that we've been talking about. Prices in this phase are going to go much, much higher. And I'm going to try and give you some quantification. I don't know in every region of the country that they're all going to be going the same, but prices are going much, much higher. It is to your benefit to not rent, go buy a house. And if you're my age, if you're a baby boomer, you need to protect your purchasing power because inflation just grinds it out. You could be looking at loaves of bread that are going to be $12 or $15 for a loaf of bread. 15, 20 bucks for a gallon of gas. You could be having electrical bills of $800 or $900 just because the US dollar maybe drops a little bit, but inflation comes and grinds you away. And I think home prices are the best inflation hedge you can possibly have. You can rent them out. Rent will stay with inflation. It's a great index for inflation. The value is going to go up as inflation goes up, so that you're keeping your capital gains are going up with inflation. And oftentimes in really good markets, not only do you get inflation, but you get organic growth, and the same with rent. So rent typically will outpace inflation and keep you whole. And we would like to have 10 properties. If you had 10 free and clear properties as a baby boomer, I'm going to tell you, you're going to live very, very well for the rest of your life. For the rest of your life, because free and clear certainly mitigates a lot of risk. Let me go to some of these slides. I don't want to make this a really, really long video. I have a lot to say in a very, very short period of time. You're welcome to reach me at michael@michaeldeville.com. I will personally respond to you and give you some thoughts. So on the next slide, we're talking about the fact that we got money supply. Look at this money supply. It went from basically about 6 or 7 to 26. So it went up almost 400% in about a year and a half. Now that is absolute fuel. It's rocket fuel for inflation, because that money is going to seek a home. It's going to go somewhere. It's going to fuel all the excesses. It's going to fuel all the asset classes. Now, keep in mind that a lot of these asset classes do very, very well in inflation. You want to talk to your financial advisor, see how it works for you. In inflation, bonds are typically a little bit of a problem because you get rising interest rates. And of course, there's an inverse relationship between rising interest rates and the price of bonds. So as interest rates go up, price of bonds goes down. And if you're in a bond fund, that's pretty bad because we don't ever have any redemptions on these. So talk to your financial advisor on that. But you're going to see a lot of asset classes going to go. Precious metals going to do well: gold, silver, platinum, collectibles like stamps and artwork and rare things. You know, rare furniture or rare guns or rare cars. All these are going to do well. We mentioned yesterday, used cars are going up. So lots of different asset classes and probably stocks as well. So this is going to be very, very good. There's a lot of inflation hedges. You need to talk to your financial advisor, see how it works for you. I'm not telling you to have all your money in real estate, but you certainly probably want to have a toehold. You want to have part of your money. It's a very, very compelling investment anyway. But look at this spike. I want you to keep this spike in mind. We're going to keep seeing it over and over again. Now, the next slide, this is my reminder to make sure that you like my video and please subscribe because it really helps me on my marketing. And that's always good. I like that. And you know, I'm a videographer and an author, and it's fun. So appreciate that. Thank you. So the next slide, we want to talk about money supply. So when you have this money supply just sitting in the banks, not doing anything, you don't get inflation. It's the moment that money supply ignites, starts getting into the economy, gets into Main Street, and Main Street starts spending that money. You start getting money rolling over and over again. That becomes the velocity of money, and the velocity of money creates inflation. And we have so much money to turn over. So we're talking trillions and trillions of dollars that are going to be looking for a home. We've talked about the fact that when the money first goes into the economy, when we had that $6.3 trillion from Trump last March, it went right into the stock market. You saw the stock market just take off. And it takes 9 to 12 to 15 months for that money to get into Main Street, which is where housing is at. And you're seeing housing take off. But look at this spike again. Remember the spike before, the money supply? Look at this spike again. This is velocity, and we're talking about transfer of payments. So the payments went right from the government right to Main Street. We got a lot of those stimulus checks really sparked, and this is one of the reasons that we're seeing it. The money is getting into the economy, and we're getting velocity of money, which we haven't seen much of that in a couple of decades, which is why, if you follow my work, we talked about that, 6, 9, 12 months ago that I had seen inflation for the first time in decades in the pipeline. Now it's coming out and everyone's starting to see it. Again, I don't think it's transitory. I think this is a full-blown cycle. So in the next one, we're talking about global. It's not just the United States. Look at this spike. Trillions and trillions and trillions of dollars has been put in, from right around about $6 trillion up here to $27 trillion. Almost 4 times this money is going to look for a place to go. It's going to be remarkable. So this is the fuel. We have rocket fuel here to fuel any of this inflationary environment that we're in. Now, here is the most important slide. I want you to pay very, very close attention to this. Now, in my conversations with my associates, we're talking about the fact that when you're in your property and you have lumber has gone up 4 times, futures are up 4 times, steel's up double, copper's up, aluminum's up, concrete's up, and labor, we're talking about labor shortages. What do you think the cost to build is? And we're looking at commodities that have gone up 73% in 1 year. What do you think the potential increase in your home is? How much do you think the door that leads to your bedroom is up? It's up hugely. And if you had to replace it, it is going to be enormous. The builders are really concerned about cost containment because they contract to build a house. 6 months later, they deliver it to you. In the meantime, prices have gone up 73% in 1 year. Let's look at this next slide. Commodities have gone up 73%, and the price of homes nationally has gone up 11.2. Nationally, the price of homes has gone up 11.2. And the components, just the basic building blocks of your home, have gone up 73%. And we're not talking about the labor to put that door on. We're talking just about the fact that that door has gone up a minimum 73%. It is almost doubled in price. And yet the home prices across the United States are up 11.2%. Now, in some of the greater markets in the United States, they are up more than that. Now, here in Maricopa County, we've done very, very well, particularly in a lot of our marketplaces. You know, here's an anomaly, is that the luxury homes are actually doing better than the entry-level homes. Actually, they're about on par for each other, and they're going up at about the same time. We've seen entry-level homes go up over 20% last year. But commodities went up 73% plus labor. And you know, if you've been listening in anything in the news, you can see how hard it is to get someone to go to work. You know, skilled workers are just in demand. You know, if you're a roofer or a framer or a plumber or electrician, you can just get work absolutely everywhere. And this is probably not a transitory trend. This is going to last for a number of years. So if we've had commodities go up 73%, and across the country, we've had prices of homes go up 11.2%, how high do you think homes can go up? Now, here's my real estate cycle. It has been extremely accurate, telling us where we are in the cycle. I think we're going to get to a bubble. I think so. Now, I'm going to tell you, we need to make sure that when we start approaching it, our cycle is going to tell us, our calculations are going to tell us, and we're going to do something about it. We're going to protect ourselves, but we're going to make a lot of money. From here to here is going to be a lot. So I think prices can go up considerably. Can they double? I think that there's a possibility in the great markets of the United States. It's very, very difficult to believe, but I think that it's possible if we keep seeing this inflation like we've seen. And I think this is just the beginning of inflation. Then yes, from here to here could be a double, maybe a triple. So in order to protect yourself, we have strategies to do this. I mentioned it yesterday. If you bought properties and they doubled, you could sell your properties and pay the loans off on the ones that you decide to keep. And you'd have free and clear investment properties for yourself. Free and clear mitigates an awful lot of risk. Or you can decide just to sell the whole shoot and match. Depends on you. When we want to talk with you and talk to your financial advisors and see what is going to work best for you. But if you're renting, if you're first starting out, if you're a millennial, and one of the reasons that we have this accumulation phase and this phase here is that a lot of the millennials are still at home and are going into formations for families. It's family formation period. If you're one of the millennials, you need to get out, buy your first house, get it. I don't care if you're out in the boonies somewhere, go get yourself a house, go talk to the builders, go lock in some prices, go buy a house, talk to a realtor. You're welcome to call us. We very, very, very good at what we do. We have people that'll take care of first-time home buyers, absolutely positively. We'll take you by the hand and do wonders for you. And if you're an investor and if you're a baby boomer, give us a call. Let's protect your purchasing power. So I think you're really going to need it. I think if you're a millennial from here to here, you are going to be so terribly happy that you own a house in the next 3 or 4 years. You're going to just be patting yourself on the back. So let me just tell you, Again, I'm an author, love this stuff. I wrote this. How to Create a Real Estate Money Machine is what my wife and I, that's our business plan. I retired in 1991, semi-retired at 40 years old, and I've never worked a full year since. You can do that. That's in that book. And Real Estate Investing for Beginners, God, it's a very good workbook. It's a good guide for you to start this program. We want you to start. You're always welcome to call us and reach me at michael@michaeldeville.com. We'll help you any way we can. And we're here for you. So let me just recap this. I think we have inflation. I have been talking about inflation maybe a year ago. We could see the basic components starting to move. Inflation is in the pipeline. It is builds on itself. It gets worse and worse and worse. There gets to be inflationary expectations, and I think that's what we're going to be heading into. And if we do, prices will get considerably higher. When the basic building blocks are up 73% or more, and houses are only up 11, gives you a potential delta that's pretty amazing that prices can go up. Even if houses only went up 73%, just to match what the commodities are doing, that'd be an enormous gain. You would be so pleased as an investor to do that. As a tenant, not so much. So I'm going to tell you, I'm going to talk to my tenants. You should be out buying properties. I'm not concerned. We'll certainly find other tenants to replace you because the tenants are just very, very plentiful. A lot of people are going to get priced out of the market. And this is what's going to happen to millennials if you don't go out and buy a property now. If you're a baby boomer and don't go out and buy a property now, you will get priced out of the market and you'll be very, very unhappy. So again, if we can help in any way, you're welcome to reach me at michael@michaeldeville.com. We've got a great group here. We got a great staff. We're really, really good at what we do. My best to you. Bye-bye now.